AMC the other day came out and they had some news about issuing new shares, 500 million new shares that they have authorized to be able to issue. And also they had a record-breaking weekend with Godzilla vs. Kong. Things looked really, really good. They did much better than people were expecting in this opening weekend because there's only 50% capacity, like theaters right now. And despite this, only half movie theaters being open, having limited capacity, they still had a record-breaking weekend for Godzilla vs. Kong. Record-breaking numbers, the box office. There's just a much bigger turnout than people expected. And now, an analyst, even with this, came out and reiterated his $1 price target for AMC. And I think this is a joke because even at the height of the pandemic, when everything was closed, the stock was still above $1 per share. And now the worst is over, in my opinion. Like, things are getting better and movie theaters are starting to open back up again. There's obviously demand for people to want to go. Like you saw the other day, right? People turned up at the movie theater for Godzilla vs. Kong a lot more than people were actually expecting. So it makes no sense to me, but his reasoning behind this, which I disagree with, his reasoning behind this, he says, is that the fundamentals of the exhibition industry have declined. AMC's competitive position, in our view, has not improved. Its enterprise value has almost doubled, while its closest competitor's value has declined. They said the industry should bounce back, and Godzilla vs. Kong results were encouraging, but we do not see the results reaching pre-pandemic levels in the next few years. He said, assuming the pandemic value, which may be generous, implies little equity value bearing successful financial engineering. Dilution is something we care about, but I say we are formally asking approval of our shareholders, another 500 million new shares the company could issue if it wishes. So basically he's saying everything's already priced into the stock, and so he reiterated a $1 price target. In my opinion, that makes no sense because things are starting to open back up again. AMC acquired a lot of small movie theaters during the pandemic. They had a lot of debt on their balance sheet, but during the last couple of months, they've raised a lot of money through stock offerings. They've raised money, been able to pay down the debt. Now, as the economy starts to open back up again, things are looking on the up for AMC. They had record-breaking numbers for Godzilla vs. Kong. Movie theaters are starting to open back up all across the country. They're able to pay down their debt. And on top of all this, a lot of movie theaters like Warner Brothers, they actually came out and said that in 2022, they're going to actually be releasing the major movies strictly in movie theaters first. They're not going to do that dual process where they release it on streaming and in theaters at the same time. They said they're going to stick to the way they used to do it for the major titles, and the major names they're going to release strictly in movie theaters at first. And obviously there's demand for people going to movie theaters. So this $1 price target, in my opinion, is a joke. It makes no sense. Like, at least give it, in my opinion, it's not worth $1 per share. Not at all. With everything going on, reopening, people wanting to get out of their houses, go to movie theaters, vaccines getting distributed, I think movie theaters are going to do extremely well over the next couple months. I think there's going to be a surge as more people get vaccinated. I think we're going to continue to see numbers rise in movie theaters. And I think there's really no way that AMC is $1 per share, should be worth $1 per share. Like, I could get that a lot of the upside's already been factored in. I could see it, not going to $20 a share, but at the current price it's at, right around $10 a share, $10 a share, I would say, even at $12 a share, doesn't matter. I would say that a lot of the upside moving forward has been priced into that, not at $1 per share. I could easily see this, at a $4 billion market cap. I think there's still upside here in the long term, but even if anything, a neutral rating, if anything, I would say, especially with Wall Street Bets, all the people behind this stock, I don't see it selling off to $1. I think this was ridiculous, but I don't, I'm not on the other side of it where I see this going to $30 a share anytime soon, but definitely not to $1.